Financial markets really reacted with shock. In negative, we saw that the share prices for not only European car manufacturers but also for US car manufacturers went down. So clearly this tariff announcement is very negative for financial markets, because financial markets are pricing in that this will start a negative impact, negative implications for both the US and also the European economy. It's very hard to put the implications in numbers, but what we do know is that the European car manufacturing sector is already in a weak state. The numbers are not looking too good. So what now will happen with these announced tariffs is that there will be an additional pressure on European car manufacturers. How it will exactly play out is unclear, because we don't know whether the demand in the US will really come down, or whether US consumers are able to or willing to pay a higher price for European cars, or whether it is the European car manufacturers that will see their profit margins shrinking. So it's either of these two, but what is clear is that it's going to hurt and it's going to hit the European car manufacturing industry in a very weak moment. So far, the European Union hasn't reacted at all. It looks as if the European Union wants to wait until next week, when we have so-called Liberation Day on April 2nd, and when we will probably get more tariff announcements from the US administration. It looks as if the European Commission will then want to present a full package of retaliation. Whether this will be blanket tariffs, so across the board on all US goods, or whether it will be more specific, remains unclear. The problem is that even if instinctively everyone would say, why is Europe not reacting? Why is Europe not reacting with force? Because this could be the only language that the US administration understands. The problem for Europe is that it is more depending on the US economy than vice versa. So Europe has probably more to lose from a trade war than the US.